And welcome to Chart of the Day Cafe for Tuesday, April 26th, 2016. Just going to read our disclaimer quickly. Trading stocks has a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. Thank you for your patience with that. So as regular viewers well know, we always start our videos off with a look at the Russell Index, and for that we're using the IWM, which is the ETF that represents the Russell 2000, looking at it on a 5-year monthly time frame, and we've been paying particular attention to the blue channel that the Russell traded within through all of 2014, and this is where we are right here, right now. So we were talking about the candle for the month of March being a bullish candle that pushed price back into the channel. Would April complement March? And yes, so far it has. So it's the 26th of April. We've got a nice bullish candle shaping up, but we want to be aware that we're coming into this upper blue band, this area of resistance, the thinking being if it corralled price and prevented price from going higher through all of 2014, it may offer some resistance over here as well. So I just wanted you to get that broader perspective. Let's pull it into a smaller time frame. We're looking at the 6-month daily chart now. In last Thursday's video, we talked about this price gap being filled and the dojis showing up on the chart. The dojis indicating a market looking for direction and indecision, but the market has continued to trade higher. You can see price up and over that 8-day EMA, which is so important to us at Chart of the Day Cafe. So price strength is continuing in this market. I'm filming this at about 8:15 on Tuesday morning. The futures are pointing to a higher open. So with price strength continuing, I will be putting a chart in front of you today for our video library. We're building a library of really great charts, go-to charts to go to, and they're always for your further research, but might be worth a look. So it's from the healthcare sector, and I want to show you why I'm choosing it. We're looking at the XLV, which is the ETF that represents the healthcare space. Again, 5-year monthly chart. I always like you to get that broader perspective. Healthcare trading in this great big wedge at this area of support indicated by my orange line. And look, it had a breakout this month. So there's the breakout. The volume is starting to tick up. It is a strong sector. So we're choosing a stock today from that sector, and that stock is AZN, AstraZeneca. AstraZeneca is a huge, big pharmaceutical company. They discover, develop, manufacture, and market prescription pharmaceuticals and biological products in the area of cardiovascular, gastrointestinal, and neuroscience. Big company. Why I'm choosing it? AstraZeneca is trading in this wedge, so where healthcare has broken out, AstraZeneca has not done so yet. So we're looking at the 5-year monthly chart. So we're going to be paying attention to this area here. You know, at Chart of the Day Cafe, I'm all about value and putting value and growth in front of you. AstraZeneca is currently trading at $30, but it's worth $34.59. It's got a really great high composite value score, and I'm going to tell you why. The growth, the earnings growth rate, the forecasted earnings growth rate for AstraZeneca in the year ahead is 25%. That's a nice, healthy number. It's got a PE of 15.47, but the reason I'm picking it for you is because, oh my gosh, dividend yield of 6.33%. That is a really high dividend yield. A dividend growth rate of 17%, so it's got a history of growing that dividend. So you've got value, you've got growth, you've got a dividend, you've got a stock in a sector that's had a breakout, and a stock that looks like it wants to follow this sector and break out as well. I'm going to move it away from the 5-year monthly to the 5-year weekly so you can better see how price is behaving in this area. So this is the area we're interested in. Let me get it a little bit smaller so you can better see. There's the 9-month daily. Want you to know Goldman Sachs downgraded AstraZeneca on April 12th. So it had this dip in price, but the buyers came back in and pushed price higher. So I want you to be aware of that downgrade, but this chart to me looks perky. with that dividend yield, I think it's one to definitely keep an eye on. It's always about the days ahead and keeping price up and over that 8-day. You can see a lot of areas of support on this chart, but there's a more minor area of support on the daily chart. So with that, I always like to put some other information in front of you about my picks. AstraZeneca is in my human genome basket. I try to pick stocks that are in compelling trends that are changing our lives, that have a lot of growth and upside in front of them. So AstraZeneca is in that basket. I'm going to include this article with today's video. There's also a Motley Fool UK article talking about they've got some drugs expiring this year, but a very robust pipeline that should push past those expiries of the drugs expiring this year. So with that, I am putting AZN AstraZeneca in front of you as my chart of the day for today. Also wanted to give you a heads up on another past pick that looks very interesting in this area, and that is Sturm Ruger, RGR. We put Sturm Ruger forward to our viewers down here in the later part of 2014. Look at the nice run it had since then. So we're looking at the 5-year monthly chart. Sturm Ruger looks like it's teeing up here to me. So I'll pull it into the 9-month daily. You can see it's consolidating in this area. If price pushes up and over that 8-day, interesting on this chart. I checked the metrics this morning. The value score is still high. The dividend is still there. Sturm Ruger, I'm going to put my little green circle to reiterate that might be one to keep an eye on. So with that, I will leave you. Have a great next couple of days, and we'll put a video out on Thursday. Thanks very much.